Okay, here we go. Welcome to Locals and Coffee. So we were just trying to figure out like what would be a really great idea of getting valuable information to people because now we know everybody's at home. We're at home. We're quarantining too. And what better way to do that than participate in Zoom calls like everybody else? So I've got Chris
Yay!
Dyer here with Cardinal Financial.
So,
Hey, do you have your coffee?
how are you?
Oh,
I put it down over there. I'd have to run and go get it. I had
oh.
it earlier. I promise. I promise. Did I break one of the rules?
Oh, well, there are no rules. You can write the rules
Yay!
as you
That's
go.
how I like it. That's how I like it.
So
Oh,
tell us who you're with and a little bit about you. How long have you been in the business and everything?
okay. My name's Chris Dyer. I am with Cardinal Financial out of Johnson City, Tennessee. I guess our company's based in Charlotte, but our branch is in Johnson City. I've been doing mortgage lending for about I thought it was 8, but probably more like 7 years now this time. And I really like it. Before mortgage, I was with Allstate Insurance. I owned an Allstate Insurance company in Middle Tennessee. But I grew up in Kingsport. I sold that and moved back here and went to work with a college friend of mine. He owns the Cardinal branch and love it. Love it.
Not quite a decade, just close. Close to.
Yeah, it's amazing how time flies.
So I know that we work together a lot with a bunch of our clients, and I'm literally calling you almost every other day. What is this COVID-19 doing with these people? Are we going to close
Sure.
on time? Are we going to close on time? So
Well, I get that question regardless whether COVID-19 is going on or not. But yeah, COVID-19's really caused a lot of volatility in our industry, in the mortgage industry. I mean, even for you guys, it's just causing changes in the way that we do things.
can you kind
Uh,
of walk us through some of those changes that you think that some people out there aren't able to get that information to them?
Yeah,
Uh,
absolutely. So the government, I'm sure a lot of people by now know about the CARES Act and a lot of the things that came with that. You know, there's the payment protection, the paycheck protection, the small business loans and some of the things that affect the mortgage industry going on. One of the big words in our industry right now that we're having to deal with is called forbearance. And that is basically putting a pause on having to pay your mortgage payments. The government's saying with all the unemployment and everything going on, with all the uncertainty out there, that mortgage lenders are now required, if you have a government-backed loan and you've got financial difficulty due to the COVID pandemic,
mhm.
they're requiring that they give forbearance, and so they don't have to make their payments. Right now, I believe it's at 180 days is the initial that you can request for. Which is great for the consumer, but it's putting some stress on the mortgage industry because even though the consumer's not making their payments, a lot of the mortgage industry has to pay somebody, and they're not getting the money coming in. So they've got money going out, but no money coming in. So if the company doesn't have savings or a strong balance sheet, they can be in trouble there. There's some talk right now with the government to try to put something in place to kind of take some of that pressure off some of the banks and servicers, but right now none of that has happened yet. So um, that has just kind of put us in a really weird spot as far as the mortgage industry goes. Like certainty, offering certainty and building trust is one of the biggest things when you're getting a mortgage, because it's usually the biggest purchase of most people's lives, and the financial instrument to get you into that, or to make that purchase happen is important, and making sure you're getting the best value is important too, and you can do what you want to do and get into the house that you want to get into. And the reason I bring those things up is because right now that's not a certainty like it used to be, just gosh, back in January before it really hit and everything. They've taken some loan programs away. The investors are not investing in certain mortgages anymore. So if nobody's going to buy the mortgage, then we're not going to offer the mortgage as a mortgage industry. So there's some products going away. The first thing that happened as far as my company goes is they took away the jumbo loans and they took away some of the down payment assistance loans. So that would be the top end of the market with the jumbos, and the lower end of the market, or price points with the down payment assistant programs. So it's kind of affecting the top and bottom of people trying to qualify for a home. Chase, I believe it was Chase. It may have been Citi, but Chase has talked about moving their credit scores up to a 700, I believe, and you got to have 20% down payment, which is crazy. So there's a lot of volatility, a lot of uncertainty, and because of that uncertainty, people are pulling back on some of the programs that are out there, and things like that. I mean, there's a lot going on in the mortgage industry, and right now, and it may change tomorrow as far as forbearance, or make. We don't know how that's really going to work out, so we're just kind of holding on.
So what is the difference between forbearance and forgiveness? Because you mentioned forbearance a few times.
Yeah, so yeah, that's a great point to bring up, because people should know that forbearance is not forgiveness. It's not like you get pause is not the same thing as it just goes away, is deleting or anything like that. So you're still going to be required to make those payments. Certain banks, there's no real guidance from the CARE Act or the government as to how banks are supposed to handle that either. So there's different talk out there right now. Don't know how it's going to all play out, but it could be a situation to where if you get into forbearance and you skip 3 monthly payments, and then and say you're ready on your fourth payment to make the payment, they may require those other 3 payments to be made all at once. So that would be like making 4 payments at once. So we don't know if that's going to happen or if they're just going to tack it on to the end of the term. And if you skip 3 payments now, just make 3 extra payments at the end of your loan, kind of thing. There's a lot of uncertainty on how that's going to be handled, because that wasn't written into the law or the act or anything like that. So it's kind of left up to interpretation, so to speak.
Okay. And you mentioned a little bit about credit score before. I know that there are a lot of people that would hear that and be just thinking, oh my gosh, I can't buy a house right now. So what would be some good advice for people that need to raise their credit score? Is this a good time to be working on it?
I absolutely think this is a great time to be working on your credit score, because, I mean, credit score is always important. The loan pricing is based off of credit scores. So even if you qualify now with a 620, 640 may get you a better loan or a better product, and 680. The further you go up that ladder, the better off you are as a consumer, the better value you're going to get, and everything like that. So working on your credit during this time, if you don't want to be out, if you want to stay at home and not look at any homes or have a realtor do virtual. Are you doing virtual tours?
Oh yeah, I'm doing virtual.
Okay, yeah, I thought you were. So virtual tours are kind of becoming the norm now. But if that's not your cup of tea, so to speak, and you don't want you want to do the buying process, where you go and actually physically look at the house and all that stuff. So you're waiting, right? Yeah, now is definitely a time to work on your score, even if you've got a great credit score, because the difference between a 700 and a 740 can mean thousands of dollars over the life of your mortgage. And right now I've got software in place, and I think some mortgage lenders do, but I know that we do, to where if I pull your credit and look at it, I can run the software on the credit and basically tell you exactly what to do to move your score to a certain point. And it's maybe the difference between shooting with a scope and shooting with a shotgun. If I tell you exactly what to do, you can zero in on it and get the most bang for your buck, as far as if that's like paying off a collection, getting a deletion letter, or let's see, paying down your balance a lot of times on your credit cards works. But the big thing on that is, don't work on your credit before you get a hold of me, because you may do something that it's not always logical when it comes to credit.
Yeah.
Get a professional involved, have somebody look at it and everything like that, because there's some really bad pitfalls out there that can mess you up. Like if you pay off a collection, it doesn't really help you if you don't get a deletion letter, and that's a process. And I can walk you through that process and make sure that your dollars get what you want, get your credit score up, that kind of
A
thing.
common question I get, and I still get it every once in a while, is if Do you actually pull the credit and it dings my credit whenever you take a look at it?
So yeah, that's one of the biggest things I hear. Biggest one of the biggest questions I get, because like my third question after your name and where do you live is your social security number, and it usually it's like, are you going to pull my credit? Yeah. Um, here's how the that works, as far as it will ding your credit when you get what we call a hard pull. A hard pull is when you're applying for new credit. Okay. And the reason that your credit score dips is because there's a couple reasons, but one of the main reasons, one of the older reasons, is because there's a time frame from when you apply for new credit to when it actually has to be reported onto your credit file. There's a 60-day window in there to where, like if you think about it, when I pull your credit, it's usually about 30 to 45 to 60 days before you're in the house and the loan is closed and that financial instrument, all the terms and everything have been signed off on, right?
Mhm.
So in that time where you're applying for new credit, your credit file is kind of a little different than if you weren't, because you're going to have something come up there and affect your debt to income, and affect a lot of things on your credit file. So that's why your credit score dips, is because of the unknown factor in that. Usually it's supposed to come back up after 60 to 90 days and everything, as long as there's nothing really changed. But if you've got a multiple pulls and everything else, it gets really complicated. It can do. But the fear comes, I think, a lot of times from people have had the experience where a relative of theirs or even themselves, typically, and don't shoot me if you work in a car lot, but typically when someone goes to shop for a car, um, it's been a standard practice in the past for, let me find out the best rate for you, and they'll pull their credit 15 different times with 15 different banks when they're shopping for one car, and their scores can go from, I don't know, a 700 to a 650, just because all the inquiries and everything like that. So that's kind of how that works and everything, and where the fear comes from. The good thing to know about mortgage and hard credit pulls is the federal government protects you as a consumer when you get your credit pulled in the mortgage industry. The government knows that to get a rate, for me to give you a rate, I have to have your credit score in so that I can price the loan, because it's driven off the rate.
Mhm.
Um, so because of that, the government forced the credit bureaus to put into their algorithm, or how whatever figures out the magic number of the credit score. They forced them to make an allowance so that you can get your credit pulled in a 45-day window by a bunch of mortgage lenders, 5, 6, 15, I don't know, but it will only count as one mortgage pool. So how that works out is, if say you've got a 740 credit score, I pull it and 3 other banks behind it pull the credit, all while you're shopping for a mortgage rate, all within a week. That should just count as one hit. You might see a 3, 4, 5 point reduction in your credit score for about 60 to 90 days. Anytime a mortgage lender tells you not to get your credit pulled by another mortgage lender, they're trying to protect their business and not let you shop. So I invite you to go pull, have it pulled, but make sure you do it during the same time so it doesn't negatively affect your score and everything.
Mhm.
So long explanation for that one. Sorry.
Oh, no, you're fine. I mean, I could list on both hands. Sometimes I can list it on my toes and everybody else's hands of how many times I get asked that question. Everybody wonders the question. Along with timelines, I know that this CARES Act, I know people have been pre-qualified before this CARES Act was implemented and this COVID-19 started. What do they need to do now? Do they need to go back and call their professional to get them pre-qualified again? Because
Hopefully,
timeline kind of throws everybody for a loop, I would imagine.
I mean, everybody's situation is individual, right? But hopefully they've been in contact with their mortgage lender throughout this. If they haven't, if they've just kind of, for whatever reason, not been a hold of their mortgage lender, I would definitely tell them to get a hold of them, because they may have been qualified for a program that no longer exists. I've got programs that I had in January that are gone. One day, I mean,
Yeah.
here one day, gone the next. And so I had to call my clients and say, hey, bad news. We can't use this loan product. We'll have to figure out another way, or maybe it's a time thing. So it's definitely something that would be in your best interest if you're pre-qualified now, is to have a good relationship with your mortgage lender, be able to get them on the phone. We're busy right now. They should be able to call you back though. So, but yeah, definitely want to be in contact, and communication is a big part of this process anyway. So
Mhm.
hopefully those communication lines are open and functioning very well.
Yeah, because when I get new people that are looking for a house, I just keep asking them, have you been pre-qualified yet? Usually that's the first step because we have no idea what their budget is. We don't know what loan type they're looking for and if the house even meets that loan type. Like there's just so many things. I think a lot of people just don't think about the relationship that we have to have while we're working with these clients through the entire
Yeah,
process.
yeah, it's you're definitely right. It's being the first step in the home buying process. You got to know what you can do, I think, and assuming is great. I mean, it doesn't get you in any trouble ever, right? But um, but so yeah, you shouldn't assume in this matter. It's a serious thing. You should get qualified. You should make sure that you can do what you want to do, and one of the worst things to do is to fall possibly in love with this perfect house and then realize you can't afford it and you should have been shopping for maybe something a little lower. Or the other way around is, oh really, I could have bought that house, well darn, I wish I would have known. So
Right.
um, getting pre-qualified is definitely the first step in the process.
Okay. I think that pretty much covers all the questions that I had at this point. I just hear again and again there are a lot of unknowns, but forbearance is a possible option for people in the future. And
Yeah,
if you have more questions, I can always reach out to you, right? And or
absolutely, absolutely. Like as far as my clients go, and as far, well, anybody, if you've got a mortgage question, love to answer it. I'll try to be very transparent, very direct, try to get you the best answer I can. Sometimes the answer is no, or not right now, and that kind of thing as far as pre-qualification goes. But if you've got any questions about what you can do, or what's the right thing to do, or even who to contact, or that kind of thing, would love to talk to you. Even if I'm not your mortgage lender and you can't get a hold of yours, I can still answer questions and that kind of thing. So yeah, information is key right now, and I struggle to stay in front of everything, and just make sure that I'm giving people the right information. So um, whatever people need, I mean, now's the time when we should be kind of coming together anyway. So whatever people need.
so out of all of this, what is a good and positive thing that's kind of coming out of this COVID-19 that's impacting your industry
Positive things. Well, a couple of things. Number one,
or impacting your clients? Like,
well, okay, so okay, great. So as far as the industry goes, one thing that is good, that the Fed is really helping out. They're doing some good things. They're not doing everything they could. And we wish, as a mortgage industry, we wish that they would do a little bit more on some of the things, especially with regards to forbearance and some of the services out there. But the Fed has been really good. Their monetary policy has been good. They're balancing things out. So they're doing they're doing a lot of good work there. So overall, your government's working for you pretty good there. As far as individually, like a silver lining, working on your credit, getting your house in order, keep saving money if you can, and everything like that. That would be my advice if you want to own a home. Kind of probably the same solid advice, maybe before the outbreak. The cash is king, so to speak. So the more money you save, the more you're going to increase your chances, or increase what you can buy. Um, that would kind of, I guess, be my silver lining. I guess it's a time to regroup and get your house in order, so to speak. Um,
I would agree with all of that too. I mean, now's the perfect time to just look around the house. How can I get my house ready? Or maybe I have to buy a house and I don't really know how to make that next step. And you guys are still available too to be able to.
yeah, well, if you think about it, I mean, everything's on pause. What happens when everything gets lifted? So everybody's going to be rushing in. So if you've got if you're already pre-approved and everything, and then you're going to be one step ahead of maybe a lot of folks, because human nature is to procrastinate and wait till the last minute to do things. So um, that would be my little piece of advice, would be, is if you want to be a homeowner this year and you were thinking about this spring and now you put it on pause because of COVID-19, I would ask you to unpause it and get ready, and then because pre-approvals are good for 90 days, and hopefully this thing's coming out of it in 90 days, or hopefully we're well out of it. I'm not sure. If I knew that, I'd have all the answers, right?
Yeah. I'm pretty sure no one has any of those answers at this point. No one.
If they do, they're hiding.
Well, I think it would be fun to ask a question for everybody that does locals and coffee. What hobby have you picked up during this COVID-19 quarantine crisis? Not really
um,
COVID-19 quarantine. We'll just say that.
I think I may be in the same spot as a lot of people. I used to eat out all the time. Like basically, I was a restaurant guy. I've become a learn how to cook guy. I cooked cornbread for the first time ever, and it wasn't that good. But yeah,
That's a step.
I didn't think I could, so I did it. It was fun, and learning to cook new things. I guess would be what I'm doing. I like to eat, so
Well, everybody
yeah,
likes to snack too, and we're all learning how to snack in these times too.
yeah. Snack, eat. It's all the same thing, isn't it? I mean,
All the time. Is it a meal? No. This is my second meal of the day. Or no,
yeah.
my second
Lunch
meal.
is a period of time. It's not like a specific meal. But yeah, that's I guess that's the one hobby I've been doing. It's yeah, that's it.
Well, thank you so much for doing this. I think this is going to help a lot of people that just they're having a hard time deciphering the information that's coming. Like the CARES Act is just so meaty. There's so much stuff in it, and it's just really hard to kind of interpret what's in it. How does that benefit you and everything? So I really appreciate your time.
I appreciate you.
Mhm.
Thanks.
See ya.
See you later.